So this is how the false breakout would look like graphically. Assuming the markets are heading lower and making lower lows, lower highs. Here, price has found some support before breaking through it. So the next time price comes back to this level, you would expect this rounded retest of this former support level to hold as resistance, and price should go down from there. Instead, what may happen in this case is you may get some downside follow through, but then it reverses, or it goes straight through this resistance level and goes back to the prior range, like this, for example. So at this point, we've broken above this most recent high, and there's been a shift in the market structure of lower lows and lower highs. The sellers who sold the rounded retest of the former support level, they have been trapped now. So the idea here is to go long on every single dip back to the former support levels. For example, here, or once price goes out of the range, you can buy the breakout of that or the rounded retest and so on. So the whole point is sellers are trapped. So you should be looking for targets where the seller's stop loss orders might be resting, and placing your stop loss orders below where the trap has happened. For example, if you traded this rounded retest, your stop should have been here, for example. Or if you traded this retest, your stop should have been below there. So from false breaks, often you'll see fast moves in the opposite direction. I'm going to show you a couple of examples how this looks in live charts. Okay, just bear with me 1 second. So one of the examples that I can think of is silver. Here we have a perfect example of a fake out. Silver was going higher before the pandemic hit. It had created a major support here around the $14 level. It then broke below that on concerns over demand once the coronavirus cases spiked across the world and lockdowns started. So we're looking at the monthly chart. Let's go down to the daily. So this is how silver daily chart looks like. This is the key level we looked at on the monthly. Silver price crashed below this level, and notice how the RSI went to severely oversold levels. So this is where you should have anticipated prices to turn around. So I'm just going to get rid of this. The first major sign of a reversal came right here when price created a low, and then a few days later tried to break through that low, but it failed. So you would have seen this as a clear fake out on the intraday charts. But on this daily time frame, you can see on the next day it formed the green candle and it just went up from there. So if you didn't trade it there, you could have waited for confirmation, and the confirmation was this right here. When price went back above this pivotal level of $14, that level should have offered resistance if the trend was still bearish, right? I mean, it did offer some resistance around the 14 to 1450 level. There was some resistance there as price came back down, but look what happened after that. So knowing that the sellers are trapped now, this is one of the ways to look for trades, on the long side. This level here it should have offered some resistance after the breakdown. This candle broke through this low. The rounded retest offered some resistance here, and again another 2 days later, and then we burst through that level. Another sign that the sellers are getting trapped. Look at here, price formed a low. On the next day, came back down, tried to break through that low. Once again, the sellers got trapped there, and price rallied. So each time a former low breaks, now we're seeing no downside follow through whatsoever. Instead, the sellers are getting trapped and the trend continues higher. So if you didn't trade it there, the next time price comes back to retest this former resistance level, or the point of origin of the breakout right there, because that was a former resistance level. Price broke through it cleanly, closed above, came back down, retest, held. Silver then went on into a long period of consolidation before breaking through this trend line, and then it continued higher from there. I think it's gonna eventually, I think it's gonna clear these highs here. I don't know when it will do that, but if I had a guess, it would be in the not too distant future, because price is now consolidating ahead of this what looks like a double top here, but because the sellers are getting trapped, and this consolidation here is allowing the momentum indicators to work off their overbought conditions. So if I put the RSI back on the chart, you will see that here the RSI had reached overbought levels, but now this consolidation is helping the RSI to unwind its overbought conditions through time rather than price. That's really important, that the RSI goes is no longer overbought because of time, because of consolidation, rather than a sharp sell-off. The consolidation will allow the RSI to work off its overbought conditions, and the price of silver is potentially winding up for a push above the most recent highs. So my guess would be that from here, silver is most likely to go to $19, above these highs, rather than sell off. It may sell off, we don't know, but I think the higher probability trade would be a continuation of the rally because of how the sellers have been trapped in this bullish trend. But it all started from a false breakout or fake out right here, and since then there's been a number of examples of failures here. Right there, if you zoom in, you can see it. There's an example here. Try to break through this bearish candle's low, went below but then closed back above. Similarly here, there's an inverted hammer candle. Price tried to break through the low of that candle on the next day here, but then it closed back above, again showing that the sellers are getting trapped, and so on. Here price forms a low, rallies above it, comes back below on this particular day, and then it closes back above, once again trapping the sellers. And I wouldn't be surprised if this bearish candle again proves to be a bear trap. Obviously, if silver goes back below 1720s, 1730s on a daily closing basis, I think that would be bearish in the short term, but I don't think it would materially impact the longer term picture of silver, which is looking bullish. So yeah, just wanted to share that with you guys, give you an example of how a false breakout looks like and how you could trade it. If you have any questions, please don't hesitate to get in touch. Take care.